In this video, we're going to talk about the current state of the housing market. The spring buying season is in full swing, but activity has been sluggish. The recent dip in interest rates has not stoked home buying activity, and buying is still significantly cooler than last year. Rates right now are about 6.4%, which is down from the peak in November 2022, where rates were over 7%. The median existing home sales price was down 0.2% to $363,000 in February compared to a year ago, according to the National Association of Realtors. This ends a record streak of 131 consecutive months of year-over-year increases. Total existing home sales jumped 14.5% from January to February 2023, ending a run of 12 consecutive months of declining sales. But we're still down 22.6% from a year ago per NAR. Here's what's really going on right now. The possibility of a recession is on the forefront of everybody's mind. Inflation is cooling, but it's also showing signs of being stubbornly persistent. The Fed is going to likely increase rates again in their meeting May 2nd to May 3rd, 2023. The job market continues to soften with layoffs rising, especially in the high-paying tech sector. One of the main reasons buyers are holding back in this housing market is affordability. Higher rates combined with very close to all-time high prices are making it unattractive for a lot of buyers. With today's mortgage rates, an average buyer is paying about 28% more to finance an 80% loan than a year ago. 30-year mortgage rates right now are averaging 6.39% at the end of April 20th. That's up from 5.11% a year ago, according to Freddie Mac. Home sales are trying to recover and are highly sensitive to changes in mortgage rates, according to NAR Chief Economist Lawrence Yun. A new service from John Burns Research and Consulting found that 5.5% is the magic mortgage rate where buyers are excited to buy a home and feel comfortable with the rate. Even though prices are extremely high and buyers are struggling with affordability, the housing market has the following three things going for it. Number one, there has been a structural undersupply of homes since the great financial crisis of 2008. Number two, robust demographic trends and favorable sentiment towards homeownership still make it a very strong sector. And number three, strong borrower fundamentals and high equity cushion. It's hard to generalize the housing market since there's so much variability across the nation. Through the first 3 months of 2023, the biggest home price drops were found in markets like Austin, down 3.1% since December, Boise, down another 2.8%, Las Vegas, down another 3%, Phoenix, down another 2.5%, and San Jose, down another 3.4%. The biggest uptick through the first 3 months of 2023 occurred in places like Jackson, Tennessee, up 4.7% since December, Morristown, Tennessee, up 4%, and Scranton, Pennsylvania, up 4%. Buyers are still chasing affordability. Between March 2020 and June 2022, the pandemic housing boom saw U.S. home prices as measured by the seasonally adjusted Case-Shiller National Home Price Index skyrocket 41.1%. Since then, national home prices have deflated about 3%. That reduces remaining pandemic housing boom gains to 36.9%, which is still astronomically high. Even in markets experiencing sharp declines are still up big time. Austin is still up 43.4% since March 2020. And home prices in Raleigh, North Carolina are still up 44.4%. Whether the market continues to decline or heat up really depends on where interest rates go. Remember that magic number is 5.5%. Unemployment trends, inventory, which is still at all-time lows, and buyer sentiment, which can greatly be affected by a recession. For now, the main trend that we're seeing is that markets where there's great affordability are still seeing a lot of demand and price increase. We'll keep a close eye on the market in the months to come. If you enjoyed my content, please subscribe and we'll have more content in the days and weeks ahead. Thank you.